Hey everybody, Gordo and Gary coming at you with episode number 9. Man, I love our intro music, Gary. So for those that maybe missed it on a previous episode, that's The Reply. And you can find that on Spotify, I know for sure. But Gary, what's so interesting about The Reply? I'll say what's interesting. It's you. It was your band. Really cool tune. What year was that?
That was recorded, I think in 1987. It would have been sometime in our senior year of high school.
Yeah, great. I love the music. It's like our walk-up music to the Modcast. All right, this is episode number 9. Again, I'm Gordo, that's Gary. And today we have an interesting topic. We hear a lot in our industry about private equity. And we have a very, I think a different take than what some might have. And that is why the private equity industry is in love with RIAs and how it's powering the RIA space and why it's good for you. I think there are a lot of great things that are happening in our industry today because of private equity, because there's professional money coming to our industry. And it's good for everybody. It's good for the next generation advisor. It's great for the clients. It's great for firm owners. We're going to get into a whole bunch of stuff today. But Gary, what do you think? What are your thoughts?
Well, we're going to get into it. I mean, I think that the reason we wanted to talk about this is, the private equity sort of collective interest in and investment in the RIA space over the last, let's say 5-6 years has really transformed the space tremendously. And it's really shaping the present and the future of the RIA business. And we're going to do this one episode on it. The reality is we could do a whole podcast series on it. And, but we're going to try and just unpack a few things today and talk about, first a few facts, and then, sort of our perspectives on the impact. And we think it's a positive impact. It's definitely a positive impact if you're a seller today. But we'll get into some of the details.
Yeah. And there's basically 5 kind of themes that we'll talk about. And like we've said on prior Modcast, we have a 5-minute sketch party right before the episode's recorded. So we don't have a script. We just kind of have 5 things sketched out, but there is some data that we're going to share. We did that research well in advance of our 5-minute sketch session. But all right, let's get into some facts. We recently read a survey, actually from 24. We recently read it, but it was from Fidelity, and we're going to share out the show notes, and the link will be in the notes. But in 2024 alone, purchased assets for RIAs and broker-dealer M&A transactions totaled nearly $1 trillion. That is a massive amount of money.
Number, yeah.
Changing hands, right?
Yeah.
So PE remains an industry power player, according to Fidelity's tracking. April 2024 was the first month where 100% of RIA M&A transactions had private equity backing. This pattern repeated in November and December, and there were 41 minority staked transactions in 2024, up 58% from the 26 minority transactions in 2023. So, and we have a whole lot to say about minority investors, and, call us if you want to hear that, but we're 100%, acquirer. So we acquire 100% of the business, and we bring everybody in, and you become a partner and a shareholder in the firm, and it's great for all. And we can talk a lot about that, but Fidelity, $1 trillion traded hands, a trillion. It's so hard to even wrap your mind around that volume of deal activity. And remember, we did an episode where we reviewed the DeVoe commentary from Q1 of this year, DeVoe and Company's commentary, and it was like 300 firms transacted last year.
Yeah, and you can just draw a direct line between that chart of the steady and dramatic increase in M&A transactions over the last 15 years in the RIA space with when private equity money started to become more prevalent coming into the space, because there's just more capital being put to work and more people like us. We are a private equity backed firm, as are, I think, most, if not all of the, frequent, what people call serial acquirers, frequent acquirers. And it takes money to, have transactions. And that's where, the capital's coming in from and then being deployed by, firms like ours.
Yeah. Well, the value of these firms, it's so funny as we're talking about that. I just looked to my left monitor and it's a photo. I don't know where this stuff comes from. It's just a screen thing that I guess Microsoft put on my computer. It changes every now and then, but today it's a sloth. It's literally a sloth holding a tree, and this business is not sloth-like whatsoever. We're much more cheetah-like, and that it's fast moving. And I think it was 20 years, 25, 30 years ago, sloth-like, slow and boring, and it was interesting. It was a great business to be in, but the pace of change today is really something. And you think about private equity coming to the space, and we're going to get into some highlights that we believe are very positive for the RIA community. But the value of these businesses today alone, just the value of the business, is being driven by the private equity investor, by the sponsor-backed acquirers. And so if you own an RIA today, you have private equity to thank for the value of that asset. I sold a business,
Yeah.
to you,
Uh-huh.
and the team at United Capital back in 2014. My partner and I, we exited RIA then. Man, it was a very, very different point in time. It was incredibly different. Private equity wasn't, they hadn't caught on to us yet as an industry. And although we did very well for that period of time, wow. I mean, multiples have more than doubled, 2.5 times
Yeah, I'd
what
say
they
the
were back
average,
then.
yeah, the average is probably at least double now what it was 10, 11 years ago. Um, and let's talk about a little bit of why it's not just because people say, okay, oh, so does private equity just want to pay more? No, they don't want to pay
No.
more. Like anyone else, like you, like anyone, when I say you, I mean you, dear listener, you never want to pay more for something than you have to. You don't like walk into a car dealer and say, I'd love to pay you 20% above sticker price or whatever, right? You want the best deal possible. But the alternatives back then, when you sold, you and your partner
Yeah.
sold, Jeff sold Valley Wealth
Yeah.
11 years ago, your alternatives probably would have been if you wanted to sell, finding another local RIA to buy it, which how many of those were there? And then where were they going to get the capital, right? And there were some people doing loans, but you very often, I mean, back when we were doing acquisitions back in the day, the competition, there were a handful of other firms out there making acquisitions, but the competition was usually either a local RIA doing a merger of equals and sort of trying to just get bigger and figure it out, or sort of retiring advisors being bought out by their junior partners, usually via a promissory note paid over 5 to 7 years, basically buying out that business with the cash flow from the business. So
Yeah.
if you
My
were
own
going to,
money,
right, if you were going to
effectively.
retire, you're basically be like, okay, instead of working and earning my comp, I'm just going to let these people do the work and then pay me for 5 to 7 years. But then you're basically out. It was basically kind of like
Yeah.
an
Yeah.
annuity, but with, no value at the end. And so there wasn't a lot of competition. And one of the things that, when you have more potential buyers, you also have more um, outcomes on the other side, on the sales side, that are seem to be better. So the exit the exit multiples for the aggregators are seem to be higher. So it's just kind of, the rising tide lifting all boats. But you didn't really have a lot of choices, so the prices were lower.
Yeah, I mean, there were a few, there were, Focus was around then, but it was nothing like it is today. And I think I shared this stat on a prior podcast. Depending on who you believe, who you listen to, there's something like 77 private equity firms. This is the most recent number I was told. 77 or so private equity firms with at least one investment in the RIA space. Some have multiple investments, 3, 4, 5 investments. And there's between 40 and 50 firms looking to get into the space because it's so exciting for people like us, people like RIA owners, people like the next generation talent that sit inside of those RIAs that are all across the country, your staff, the teams. Let's just get into some of the good stuff, right? So we got it. We kind of covered, one topic very quickly, which is not on our list, by the way, and that is the value of these firms today is so much higher because of RIA or because of PE in the space. But one of our notes here is PE investments drive high quality M&A with long-term value, and I think about. You read the journal or you're just a student of history, of the private equity industry. Maybe you watch some movies around corporate raiders, coming in and just basically collapsing the cost structure of a business. They come in and they take over and they collapse the cost structure of a business. They part it out, and that's how they make their money, right? And a lot of RIA owners are going, hey, you're going to cut my staff, you're going to cut everybody's comp, you're going to reduce tech, you're going to reduce client service, you're going to, how are you going to make this work? And unlike other industries, this is not a business. Private equity isn't looking at this going, we're going to cut that warehouse, we're going to shut down that CapEx, we're going to reduce this expense over there, we're going to reduce headcount by 20%, and that's how we're going to make our big lumpy return. So unlike other industries where it leads to job cut and consolidation, how does it work here in your view?
Yeah, and it's interesting because sometimes, and I know there are people out there, and it's a reasonable question, who have a sort of a negative view of private equity because they've heard about that, and sort of businesses having a ton of debt put on them, and being sort of stripped for parts, if you will, and sold off in pieces. And that's just not possible. I mean, hope I'm not wrong about this in the future, but it's not possible really in this business because it is a people business. It's a service business. And if you don't have the people, then you don't have the most important people, which are the clients, and the clients are responsible for, you know, um, all of the revenue that the people are servicing. So it's just a different model in wealth management. And I think, a lot of people would say private equity also has evolved as an industry and isn't really as focused on that, but that's for other people to argue. But we do know what it looks like here.
Right.
And it's really not about reducing costs. I mean, we'll get into it a little bit about, there are, of course, efficiencies that people want to have and drive. And, that comes somewhat from scale, but we'll get into that in a few minutes. But, yeah, it's, as you said, it's not a cutting and saving way to value. It's a growing to value.
It's not the way Edward Lewis, the famous corporate raider, aka Richard Gere from the movie Pretty Woman, makes their money, right? We're not looking at private equity firms as an Edward Lewis character where it's a corporate raider coming in to just, gut the business and then again make a big pop on the return.
Yeah. I'm glad you used a fictional character so we don't have to name any actual people.
Right. Well, right. Other than actual Richard Gere who plays Edward Lewis. All right. So it also has private equity. So it drives a quality M&A experience. And I'll share what I mean by that. They bring professional money and professional diligence and a way of operating that is just different than the RIA down the street, right? The RIA down the street is not going to have a process to go through that's of quality diligence, that there's a transition team in place with the RIA down the street, right? There's not an integration team. There's not a growth team that rallies behind that firm and your firm upon joining one another, right? It's kind of a, hey, I like you, you like me, let's throw all in, I'll buy you out, you'll retire in whatever time frame we agreed to, and I'm going to take really good care of your clients, right? And so what private equity has done is it's professionalized the M&A space. And that's good. It's good for you, the seller, to join an organization. This is a little self-serving, I understand, but there's lots of people like modern, or lots of firms that are strategic and serial acquirers, that will have a transition team, an integration team, a growth team. They'll have a field operating team. They're going to professionalize that experience and really bring you through a process. And that's fueled valuation multiples that you're the beneficiary of. It's given key people on staff in your office a great career path and career opportunity that wouldn't exist if you just joined the RIA down the space. So what PE really does, and we'll wrap this point and go to the next one, is it provides a consistent and robust marketplace for sellers. Again, valuations are up. Professionalism has come to the industry. When I talk about professionalism, I don't mean about delivering to the client. I mean about how the businesses are being operated. And private equity is throughout our industry, all of our technology platforms and partners, the people that you're doing business with, the majority of them are private equity backed. And so they're bringing a different level of engagement with you and professionalism to the entire industry, not just the M&A space.
Yep.
All right. So I touched on number 2 a little bit, Gary. PE is professionalizing the industry. What does that mean to you?
Well, I mean, it goes hand in hand with what you were just saying about sort of creating a consistent marketplace on the acquisition side. The other side of it is the management sort of skills and expertise that private equity firms are looking for in the firms that they're investing in is probably creating a more consistent, more professional approach across the RIA space, because you have just sort of this trickle down effect of firms that are being run not as much as sort of just solo practices or just, one or two people, but with, some rigor around things that are really benefit the clients, like um, investment management, billing and reporting on a consistent basis, client service being delivered on a consistent basis, just more focus on sort of best practices, and that trickles down. And it's not to say that 15 or 20 years ago that clients weren't being well served by their individual advisor. But like everything, I mean, there's probably a lot more variability, and some people might say, well, that's not so great. Like, like if you think about, chain restaurants or chain stores around the country, you go around the country and you kind of see the same places everywhere. And it's like, on the one hand, maybe there's not as much local charm. On the other hand, you kind of know what you're going to get. It's not quite like that, because in this business, it's still being the client experience is still being delivered by the local advisor. It's just that the back office and the standards that they're sort of applying to their business are being elevated to a certain degree by the fact that you've got these firms that have invested in them, and those firms have been invested in, and they want to make sure that things are happening sort of on a relatively consistent basis. Not that every client meeting is the same, but things like the approach to investments, the approaches to billing, reporting, all of that.
Yeah. And I would say everything that you've just laid out, right? One thing that's kind of laid out on our show notes here, PE demands operational excellence, right? And that's really what you were talking about. Firms who are lacking systems, process, or tech will just struggle to compete in the future. And PE brings structure, enhanced career pathing, like I mentioned a minute ago, growth capital to help, help create growth capacity in your calendar, and then bring that capital structure to the business to help you grow in strategic expansion of client services and solutions. For example, we talk a lot about tax today. Well, a decade ago, RIAs had nothing to do with taxes. Like that was just a topic that RA, well, I'll refer it to the COI the CPA down the street. He's my COI or she's my COI. And they refer me clients all the time. And, today we all talk about, most of the larger firms are talking about a tax offering to the client set, and how that can significantly increase, new client growth, uh, preserving client relationships, offering additional services to the client. And it's really private equity that's done a lot of that great work around it. I know you were at a conference, you've said this before, you were at a conference one time, and at the time, the CEO of Focus Financial, I think it was at a conference,
Mhm.
said, if you're not pursuing scale through PE, are you neglecting your fiduciary duty, right? It was a provocative question asked from the stage. Are you neglecting your fiduciary duty if you're not considering joining a firm who has more scale, who has a more professional environment, who's bringing more stuff to the client relationship?
Yeah, no, and that was quoted in CityWire, so it's out there. And yeah, I happened to be in the room when
Yeah.
that statement was made, and I think it was I think it was a panel about, investment in the RIA space, but it was I assume a deliberately provocative question or thought-provoking question. But and it was that's not really the point we're trying to make, but it was an
No.
interesting point because there are some people who said, well, if you have outside investors, are their interests in conflict with your fiduciary duty to your clients? And that's been one of the questions about, there's really not been a track record of RIAs going public. There are big, obviously, wealth management firms, that are public, but there hasn't been a track record of RIAs going public. And there's been that question of like, well, if you're focused on your quarterly earnings, are you really focused on your fiduciary duty? And then I think this question was sort of the flip side, which is if you're not pursuing investment in your firm and then an increased ability to provide more services, not just investments, not just financial planning, but other things your clients need and they're asking for, whether it's help with estate planning, whether it's help with taxes, whether it's help with insurance, all of which are in, top responses in surveys of, services that clients want from their advisors. Then, is it, are you not fulfilling your fiduciary duty if you're not, you know, joining a firm that can help you do that or taking investment that can help you do
It's
that?
an
There's
interesting
no
thought.
answer to that.
Yeah,
It's a,
it's just it is provocative, like
yeah,
as you say, and it's an interesting thought. But
right.
back to kind of like what PE is bringing to the industry. Think broadly, right? Again, they've created this thriving marketplace for M&A activity, and that has created a whole nother industry that's here now. Like, we have a fantastic PR firm. They're the beneficiary of private equity investments because we're private equity backed.
Right.
Many of their clients are private equity backed. Their bills are getting paid by private equity backed firms. Think of, our law firm, our legal team, very large firm, and they work with a number of firms like ours. And again, all private equity backed. So you have PR people, you have legal people, you have accounting people. Um,
Yeah, it's a whole ecosystem.
it's a whole industry that is
Yeah,
now here supporting the M&A activity that
right.
didn't exist a decade ago, let alone 20 years ago.
Oh, I want to say
Um,
something too, because I mean, this show's not an ad for
no.
PE investment in RIA. It's just we're just observing what we've experienced, and we have direct experience with it.
We're direct
And
beneficiaries of it
right, and
personally.
right, but I think the key thing, I think when it works well, and of course, there's going to be cases where it works really well. There's going to be cases where it works reasonably well. And there's going to be cases where it doesn't work well, like any range of investments. I think where it works well, and I think if you talk to PE investors, they would echo this is when they can provide capital and sort of broad, sort of general ideas around, what we're talking about, operational excellence, professionalization, things like that, but nothing to do with the day-to-day business, nothing to do with the day-to-day client experience, what you're actually delivering to clients. And that was,
Mhm.
when we were meeting with investors and in funding this firm, I don't think there was a single firm we met with who thought, like, oh, okay, we want to be sort of in the day to day. If they needed to be in the day to day, it would be a problem. It would mean they don't have the right team in place
Yeah.
to manage the firm, right? So this is not about like day to day micromanagement. It's about long term. The goal is value creation. Of course, like any other investor, they want to invest a certain amount and have it be worth more, right?
Right.
And there's going to be times, there's going to be firms where it doesn't work out, right? Like anything else. And how that plays out, it's going to be TBD with each of those firms. It usually will not be a public discussion because these are private investments, right? But I think it's important to know that when the model works well, it is not a, micromanagement of the business in any way.
Yeah, I think the quote was, "We don't want to be up in your shorts."
Something like that.
Y
Some article of clothing. I don't know what.
yeah, something like that, yeah. But what they're really good at doing, so private equity, they our sponsor, Crestview, has been just fantastic, and we have a great relationship with them. And it's all about, how do we grow? How do we get bigger? How do we support you? What are your thoughts? It is strategic. It is not tactical whatsoever with them, and they're helping us think big. But they don't want to get burdened or bogged down into the human capital details, or the what software are you using, or how, what are you paying people, or what private equity, what PR firm did you like? So far from what they want to talk about. But they do bring growth capital, and they're not looking to just, back a management team that's out acquiring assets,
Yeah.
through an M&A effort. They want to help that management team drive growth, and they do that with growth capital.
Well, when you go
And
back to, I don't know, what was it, episode 2 or 3 or 2 and
Mhm.
3 or 3 and 4 of the Modcast, please
I
go
don't know.
back.
We're on 9. It's so
Yeah.
far in the history.
But go back to our
Yeah.
shows on organic growth in the industry. And, without organic growth, these models don't work anywhere near as well. So you're going to see those firms,
Mhm.
those PE-backed firms focusing more on, I expect, see those PE-backed firms, I know we are, focus more on organic growth than an individual practice probably is. Because it's not, you can't just be, flat and buying things. It
Yeah,
doesn't.
they're not looking to run on a treadmill.
No,
That
no,
as your analogy
exactly.
in that
Exactly.
show 2 or 3.
Yep.
All right, so they do bring growth capital and growth strategy, and will engage with us in conversations around, how are we efficient, and how are we driving growth, and how are we helping our advisors? How are we bringing more services to the clients?
Yeah.
All right, so why do they love wealth management? I mean, just open your mind if you're the listener and think, why would a private equity firm want to invest in the RIA space? There's no factories, there's no machinery, there's no equipment, there's no capex, there's no, we don't have thousands of
Inventory.
employees. What's that?
There's no inventory.
No inventory,
Right.
right? It's recurring revenue. It's high client loyalty, right? Low capital, low capex, very low capex spend. No accounts receivable, right? We're not sending thousands of bills out every quarter and hoping that clients write checks and send us what they owe us. So that makes it a very low maintenance accounting burden, right? It's a very efficient business model. Historically, although we talk a lot about organic growth just being 1% to 3% as an industry, historically it's strong organic growth and highly scalable. What does that mean? So we should strike the word organic, strong growth, because you're gonna take on clients, You're going to grow the wallet share of those clients. You're going to deploy capital into some form of investment vehicle that hopefully is productive over a decade. It certainly should be productive. So they're going to start with a sum of money. They're going to bring more money to you. You're going to deploy capital into the capital markets, and that's going to provide a return. That creates very strong, scalable growth over time. And it's a very attractive business to be in.
Yeah.
Stable,
And
right?
there's also tailwinds,
Durable.
right? And there's two other tailwinds to the business, as people say, and just on a macro basis, if you will, which is, there's still a lot of advisors who are in the wirehouse broker dealer, independent broker dealer world. And even if only relatively small number of them move to the RIA space every year, it still is growing the overall RIA space. So
Yep.
that's another piece. And this has been true for a long time, and now this could change. There's cycles, but if you're an investor, broadly speaking, you believe in markets, right? So because we're invested in markets, the markets, the mix might does and should change depending upon obviously the client's situation and current outlooks. But you generally believe like investing money for people will produce a positive return if you're an investor. And if you don't believe that, then you might not have anything to invest in. So, so you also there's an assumption, even if it's a relatively low rate of return, that the markets will provide some floor level of return to investments. It's different every year. It's very hard to model, obviously. Like we always just in our own models, we just put a flat number. We put not a flat number, not zero, but the same number every year and just say, this is the number we're putting in. It's wrong.
And it's a low number. And it's a low number to begin
Right.
with. Yeah.
But
And
if
we
you're
know it's wrong.
right, but if you're investing in the space, you're going to assume, okay, whatever you want. If you want to be super conservative, if you want to have a base case, a medium case, a high case, whatever. So those are components too. You get that benefit usually, certainly over the last 16 years, of being in a business that in and of itself has assets that are invested.
Yeah, it's highly scalable, highly durable, right? So the clients they don't wake up in the morning thinking, I'm going to go change my financial advisor today, right? It's
So
just, it's
painful to switch.
Yeah, it's a high switching cost. So it's a very attractive business. And again, very scalable, very stable, very durable revenues. And the markets and wallet share and some new clients every year. They really good, as you said, tailwinds to the business. So we think private equity is an absolute opportunity, not a threat to this business. And we've already talked a lot about the why, right? It's not about slashing jobs. It's not about doing bad things to clients. And they want to bring great things to clients, not do bad things to clients. They're not looking for some exotic product to go now sell to the client that has a whole bunch of embedded fees that they benefit from, they being private equity. So it's not, they're not dangerous creatures, if you will. These are very good people from everybody that I've met in private equity. So it enhances the infrastructure. And again, it helps you invest in talent. It creates jobs and career pathing for individuals. I can think of probably 20 people in our firm. I mean, 10 for sure, right off the top of my head. I'm sure you could come up with another 10 off the top of your head of people who today have much bigger roles in our business than they did when they were part of their local RIA office when they partnered with us and they joined Modern. And my own career has unfolded in ways that I couldn't have imagined, and private equity is what allowed for that to take place.
Yeah, I mean, a lot of jobs have been created that wouldn't exist, and a lot of careers have been enhanced.
Yep.
Yeah, I mean, there's a lot of value that comes out of it. Money comes in, and it has to get put to work. So as long as businesses are doing well and growing, you're going to have that dynamic. And if they're not growing, then slowly, but over time, the investments will dry up, and there won't be future rounds of investments, and then the business will kind of look like it did 20 years ago. And, that may or may not happen. It could. I do tell sometimes when we're talking to sellers, people talking to us, there's no guarantee, right? That,
None.
markets will stay where they are. Some some businesses that were very hot 30 years ago are not hot anymore. It doesn't mean that they won't exist, but this outside capital might not be pursuing it if performance isn't good over time. So, I mean, I've said to a number of people who've talked to us, I view this as a golden age for RIA sellers. And Whether they take advantage of it or not is up to them. But if the firms don't perform in the future, then investments will flow somewhere else. Future
Yeah.
investments. So
Yeah. But firms have performed very well that are private equity backed. I mean, you just go to your favorite news outlet and read about recapitalization events or transactions that have taken place in the space by private equity backed firms, whether that's a recapitalization event, it's an exit, you go find what you want to find. But it's been good. It's been very good for private equity to be in the space, and it's been very good for shareholders of those firms that were private equity backed. So again, our last kind of bullet point here is PE investment strengthens firms for long-term success. It makes the firm more valuable and well-positioned for the next phase. What are we talking about? You've been at this. You've been in the financing of a lot of businesses. You and I talk to our private equity
yeah.
firm as well as Mike all the time. But what does this mean for you?
Well, I mean, to me, what it says is when you take all of these things together, when you take sort of, elevation of the operational, um, expertise of a firm, when you take, an evolution of the client experience, doing more for clients and doing it better, more consistently across your client base, across a broader, bigger client base, having economies of scale because you have 20, 30, 40, 50 offices who can use the same things instead of everyone going out and shopping individually for everything and buying at the most expensive price. You add all those things up, improving the investment management process, the planning process, adding other services, understanding how to grow and growing on an ongoing basis, not just, on an occasional basis. And you have a better, more valuable firm that's more attractive for whatever outcome you want. There's firms that are going to grow and maybe go public, maybe just stay private, be private partnerships and just be able to distribute, whether they're going to distribute dividends to shareholders or they're going to buy out shareholders, or there may be more sort of mergers of larger firms, but you know, creating maybe some national RIAs that can compete eventually with the big firms that we see on TV all the time,
Yeah,
whose names come from 100 years ago.
right.
People who died 100 years ago or whatever. So I mean, it's just that would be the really cool thing is if we saw some truly national RIAs at scale who could provide, because we know that the RIA business in general provides a great um, client experience. We all believe in the fiduciary standard, the level of service, the level of care that can be provided. And, can someone do that at a truly national level, or even just regional levels? Um, uh, and frankly, provides at the end of the day more choices for the consumer out there,
Mhm.
and they'll go to the level of service that they want and is most attractive to them. So like we want to provide them that option. So that's where the industry is heading, I think.
Yeah. Well, you touched on this a little bit ago, which was the breakaway industry from wires to RIA. And I'll get asked from time to time, how much longer can this go? And the real question is how many more firms could transact, right? And there's considerably more firms today than there were 5 years ago. And if you look at 5 years ago and go back 5 years, it was a big move. So the last decade has really minted a whole bunch of new RIAs. There's not fewer, there's more of them.
Yeah, no, there's more.
Yeah, it's growing, right? And so I think the pace that we're on of consuming about 300 firms a year through an M&A process, we still have a growing industry. It's not shrinking. So, hey, look for the show notes. We'll have the Fidelity report. If you have a question, email it in. We'll send you some cool swag. We've got great stuff. Email us your questions. Ask us something. Comments,
we do have
whatever.
inventory. We have swag inventory.
We have swag inventory. And Gary's even upgraded his background for the Modcast. Look at that, beautiful stuff behind you all of a sudden. It was just a blank white wall.
When we started, I thought we were going to do a green screen sort of thing. And
got it. Yeah.
I don't like watching myself, so I just listen to the podcast.
Got it. Yeah. But the Fidelity report, the DeVoe report, we'll link all those out in the show notes. Why PE is a major advantage for RIAs. Hopefully you learned at least our thoughts. You heard our thoughts. Debate us. Would love to hear counter thoughts to everything we talked about today, or something that we missed. We're just a phone call away. Go to all your favorite podcast listening platforms to capture the Modcast. And then, all right, Gary, what is it? Modcast.show?
You got it.
Modcast.show. No idea if there's a .com, but
no, don't confuse people with .com.
I
know it
have no
sounds
idea.
Weird. Modcast.show. I guess, it's one of these newfangled
got
URLs.
it. Okay. All right. Well, there you go.
For those of us who remember the beginning of the internet, it's hard to understand.
Do I type in the HTTP blah 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 :/forward?
You wait for your modem to connect.
Yep. All right, everybody. Have a great day. Thanks for listening.